Phone. So we're going to speak, I was going to speak very loudly. No need for that, we've got our mics back. Well, welcome back everyone. I hope you're all well seated after an hour-long lunch break.
Yeah, and I hope you guys got a chance to connect with each other and take a look at all the cool exhibits that are going around. I know Haley and I got a quick chance to pass through, and there's really a lot of cool things going on. So yeah, Haley, what are we talking about this afternoon?
Oh, we have a very full agenda for you here at the Binance Blockchain Week. Well, without a doubt, the VC experience in the Web3 world is going to be a great deal, completely different from what we've been used to with, of course, Web 2. Now, to discuss this further in the next panel, we've invited Alex Odeggio from Binance Labs to moderate our next session on exactly what next-gen VC will look like. Let's please give them a warm welcome.
Hi, everyone. It's an absolute pleasure to welcome everyone to Binance Blockchain Week in Paris. We hope we'll have a very interesting and productive panel for you today. We have Anand from Lightspeed, Richard from Fabric, Patrick from Preside, and Neil from SoftBank. I'd like to give you a quick opportunity to introduce yourselves and tell us about yourselves.
Awesome, thank you. Quick background on Lightspeed. The fund's actually quite old. They've been around for about 20, 25 years now, rooted primarily in sort of core infrastructure, backed a bunch of companies like the Web 2 space, like MuleSoft, AppDynamics, companies like that you might have heard of that have sort of become key cornerstone or pillars of Web 2 infrastructure. But I've been investing in crypto since 2013, so we're investors in kind of the full stack, everything from like Alchemy to FTX to Wintermute to some DeFi protocols that you might have heard of. But no, excited to be here. I personally focus a lot on crypto infrastructure, specifically developer infrastructure in crypto, mostly focused on the earliest stages. Yeah, excited to be here. Thanks for having me.
Awesome, working. Hi, everybody. Luckily, I could see there were some people there because it's pretty bright out here. But excited to be here in Paris. Just come up actually from Lisbon where NearCon was going on, so I can report that there's many great Web3 crypto-related events happening all in parallel, so it's a great sign for the European ecosystem. Yeah, as said, my name is Richard Muirhead. I'm a managing partner at Fabric Ventures. In a nutshell, we are folks who have built actually companies in Web 1, Web 2, and Web 3. And we've been partially in the Web 3 or crypto space actually also since 2013, intersected with Jeremy back then. And then we helped back companies like Bitstamp and Circle and so forth at that point in time. But more recently, we're supporters of Polkadot and Ramp and Sorare, and there's a whole new crop coming through. We're about 25 people, and we've got about 250 million in commitments that we're deploying. So reach out.
Yeah, hi everyone. My name is Patrick. I'm advising Preside Capital, a big US-based VC fund, several hundred million, with not that many crypto companies in its portfolio yet, but looking forward to adding more in the future. Yeah, I've been in crypto for a while, mainly discussing regulatory and policy topics at Bitkom, where I started my career 5 years ago, approximately, the largest tech association in Germany. Have been working for a couple of startups in the crypto space, one of them, Unstoppable Finance, also backed by a couple of VCs sitting here. And yeah, excited to be here.
Hi, everyone. My name is Neil. I'm with the SoftBank Vision Fund. I'm an investor there. I've been there about 5 years. The fund's about 5 years old. We're a very different fund compared to many you've probably come across and many of those on the stage here. We're a very late stage fund. We've got over 250 growth stage companies in our portfolio, fastly approaching about 500 portfolio companies in total. Most of our fund is invested in Web 2. We're relatively new investors in the space. We've got 15 to 20 investments in the space. We've actually deployed about $1.5 to $2 billion into the space. Very much in later stage investments, mostly focused on infrastructure. And being a largely Web 2 fund, I do spend most of my time look at crypto Web 3 investments. Do spend a lot of time in other sectors as well. Thank you very much, Alex and Binance team, for having me.
Amazing. Thank you very much. As you can see, we have an absolutely fabulous panel today. And as a start, I would like to invite each panelist to share their big picture view of how they see Web3 space today. Maybe you could share some thoughts around what's the current state of the ethos of the space, the level of decentralization, potentially the scale, UI, UX, and anything else that you have on your mind. None?
I'm happy to do the first step here, jump in. So when I think about mass adoption of crypto or Web3, I mainly always have three things in mind. And you touched a couple of them. It's scalability, usability, and then the third one being regulation. And I think if we look at the last bear market a couple of years back, we have just made tremendous progress on all those fronts. In terms of scalability, we've obviously seen, when it comes to Ethereum, all those layer 2 solutions, infrastructure popping up. We've seen other competitive smart contract platforms being started and being used by a lot of DeFi applications, NFT applications. With regards to the usability, I think we're not there yet. I don't think that my mom, my dad would be comfortable just using MetaMask, for example, and getting into the weeds of transaction confirmation, gas costs, and everything connected to using Web3 today. So I think there's a lot of work left on that front, and there are some exciting startups trying to disrupt that space and building the access layer to DeFi, to NFTs. And with regards to the regulation, to the third part, I think we're slowly getting there. Obviously, we talked a lot about the EU regulation today that is being finalized and being rolled out in the next 12 to 24 months. So I think as soon as that is done, I wouldn't be surprised to have the space fully regulated in the next 3 or 4 years, also on the global space. And so generally speaking, tremendous progress. And with regards to the ethos or decentralization, and that's certainly an interesting discussion also to have here, I think it was just amazing to see the reactions and the discussions post Tornado Cash decision by OFAC to sanction the smart contract, which in my opinion is an insanely powerful symbol of how well connected the entire community industry still is to the initial ethos of decentralization. So I think although we move forward quite a lot, the initial ethos of decentralization, open, permissionless community is still stronger than ever. So I'm being quite optimistic.
Oh, yeah. Let me pile in. Sorry, first of all, to say Patrick wrote some great stuff on the regulatory side of things, so worth following him, and is super knowledgeable. So I take a slightly different, taxonomy for it, but I think we have broadly similar views, but we'll see if we can generate some arguments on the different topics shortly. But so I look at it from the perspective of developer experience, the user experience, and then how actually compelling the value propositions are. Like, is it 10x better than Web 2? Is it actually something that cannot be done in Web 2? And so I still think that on the developer experience, it's only just now getting better in terms of being able to choose, work with your language of choice or not have to learn, new languages, being able to deal with the complexities of storage in this decentralized environment, where I think there's still fundamental inventions obviously happening to happen, to make, the whole kind of architecture of these applications less brittle. And that's before you even get into composability, kind of what is an increasingly multi-chain and cross-chain kind of world. And so all of the areas I described are kind of hotbeds of possible innovation that we're trying to find great companies around. So that's developer experience happening. User experience, somebody's left their private key here. I think there was a piece of paper here on the, I hope anyway. But the private key question of how to make that sort of super simple, make it pass the grandmother test, that's clearly still a challenge. And sort of linking it to this question of compelling use cases, there's a team out of Tinder and Bumble building an app called Niche. I think anybody here not know what Tinder and Bumble are? But Niche is in that same vein, but building it on a kind of Web3 principles and doing it in a kind of progressively decentralized way. And the first thing about them is that they're actually building on Near, but the to note about them is that they're used to extremely slick onboarding. And for them, it was quite a shock and quite a kind of like they felt they went back 10 years in terms of trying to get that type of onboarding working and user experience. And so I think that gives us a measure of where we are not yet, there. And then the question is, to link those two is, so what does 10x or previously impossible dating look like? What is that actually, what's that experience for the user? What is the kind of, that makes someone go, well, I'm really not getting what I want out of Tinder, I need to go to another, is it because I get to take my data and move it to another dating app? Or is it because I can now believe what someone tells me because it's kind of like verified and provable, through the blockchain that you attended this event or something? What is it? And I think that's for the voyage of discovery they're on, but I'm just encourage the founders out there to spend a lot of time. These other things, UX and DX, will come along, but at the end of the day, if you don't build something that people really need, then we're not going to have killer apps.
I'd actually completely agree. I think there are a lot of Me Too's and how do you move Web 2 into Web 3 and just copy and paste and just apply it differently to the blockchain. I think we've seen a lot of very interesting things, but I think more broadly to your original question, Alex, I think we have Web 3 awareness now. We've achieved that quite firmly. We're all here. I mean, it's in the headlines every day. We don't have Web 3 usage yet, right? We have a lot of great experiments. We don't see nearly as many experiments as my fellow panelists here, but I think what we do also have a lot of is building blocks. And I think the building blocks are also being constantly updated, upgraded, right down to the hardware being customized for purpose, fit for purpose for this industry. So we tend to take a very different viewpoint on Web3 as to where we can come in. We're very much all about, we see there being potential. We don't prescribe or even know all the directions of possible innovation and value creation in this space. But I think what's really exciting to us is to be able to enable adoption. And so where we focus most of our time, attention, energy is really on infrastructure, for enabling adoption, user access through wallets, making it safer for people to interact with protocols. We've invested in a few of the smart contract auditing firms and so on, and more beyond that to staking infrastructure, node infrastructure, block distribution, things like that, which are absolutely fundamental to enable a lot of these application layer protocols and a lot of the great stuff that I'm sure you're all building on to really meet reality, but also have a great user experience for the end customer to really just further that network effect through and throughout. So I think we're tremendously excited. We're spending our time on the very different end of the spectrum, perhaps from many others. But I think what's also great for all of you is that you do have later stage investors now spending material time in this space. It's not just pre-seed, seed rounds getting done, and there are many of them right through this so-called bear market. But I think more than that, you have large Series A, and then hundreds of millions of dollars going to continuing to fund successful, growing business in this space, really proving out that use case.
Yeah, I'll just add my 30 seconds. Completely agree with what these gentlemen have said so far. A lot of you here are builders, right? You're building your company, you're building your product. And I think just like when you get started, there's a couple of things you want to look for, right? One, you want to pick an audience, a demographic that is going to be the ones you target out of the box, right? Like you don't want to be too broad when you go to market. And the second thing is you want to try to get to product market fit as soon as possible. And I think that's what we got with this avatar of Web3, right? For those of you who've used, I remember looking at Curve Finance for the very first time and getting inundated. And it reminded me of like, I may be dating myself when I say this, but it reminded me of like GeoCities back in 1996. But it was a site built by degens for degens, right? So it wasn't meant to cross the chasm and be used by the masses, so to speak. But we've hit product market fit. I feel like we've proven, just like these folks have said, that this works, right? DeFi works. And I think now is the time for us to sort of cross the chasm and make this sort of truly available with the Lego blocks, with the building blocks that are getting set up by you folks, and to make it widely adoptable. So very glass half full outlook on what's to come in the future.
And well, okay, shall I continue? So I was just going to say, we're going through, I mean, I don't even want to call it a crypto winter. Let's call it a crypto lull, a kind of pause, hiatus. And, in many respects, that's fantastic because whether it's different types of scaling solutions, sharding or those based on ZK type approaches or whatever it is, they're really kicking in now, but it's great to have an opportunity for them to kind of mature right now when there's not quite so much heat in the system. But we were talking backstage as well about things like play to earn. There's been tremendous success with play to earn and now X to earn, approaches. But I think we can all sort of point to those digital economies that got built and see how, their success became the root of their kind of failure. But, the story is not over. There's a possibility for that to be refined as well, and we see a lot of that happening out there in the marketplace, and all the people in that space building more resilient ecosystems. And for me, the bit that's exciting is that I think if you look back through the generations of computing that have passed, so often the biggest companies come from a sort of seemingly trivial invention or something under the radar or something classically toy-like. And here, I think a lot of the principles of that, you've got the great success here in Paris of So Rare around football cards and fantasy football, and then scaling that, which has been tough, and getting into other sports. But those principles of ownership now can be applied to other parts of sport. But I see there's a team, again, we're talking about it backstage, SailGP, which is working on doing a sort of similar thing, bringing Web3 to that particular sport, to sailing. And so we're spending time with that team, and what they're wrestling with is the question of privacy. So how do you onboard progressively new users who you're introducing to Web3, but how do you also selectively extract information from them and then preserve privacy for other parts? And for me, and I'm thankful this is my punchline, and for me, the interesting thing about that is that you can start with innovation around a game or sports or entertainment, and then address a fundamental question about privacy preservation, perhaps using ZK-based approaches, and then that hopefully will unlock a favorite area of mine, which would be what we call open health, or sometimes now called DeSci. So because if we can get individuals comfortable and regulators and governments comfortable with the way we can share our personal, biomedical data, that's a treasure trove of opportunity, I think, for Web3.
That's great insights. I subscribe to and agree with everything you said. As a follow-up question, Richard, you mentioned it as well as Neil. I think we have this pause in the market. Some are calling it a winter. And we're coming out of a very significant bull market. We had a lot of concentration of very interesting projects, but a lot of them in the metaverse space, play to earn, DAO tooling. And there seems to have been somewhat of a narrative exhaustion around that space. And I'm keen to get your thoughts on whether there are any specific themes that you're looking into this crypto pause or crypto winter, maybe something that you closely monitor. You mentioned some foundational infrastructure pieces or building blocks that are definitely coming out of this cycle, like ZK proof-based projects, privacy-enabling solutions, and so on. But keen to get the whole panel's thoughts on this.
Yeah, happy to kick it off. The analogy that I like to use a lot is that, when the very, very first airplane was built, there were no airports to support it, right? And then the airports came, then the airplanes got bigger, and then the airports got bigger, the airplanes got bigger, and we kind of kept going through these cycles, right? And I think we're, at some point you hit steady state. And I think we tested the limits of what we could do with the application space on the blockchain to a large extent, and that's why we needed scaling solutions, which is what I think became very topical and thematic. And we're going to start to see a lot of that come to life with layer 2s supporting EVM chains, or even alt L1s challenging Ethereum in some ways. So again, just because of my area of focus, I like that space a lot, especially when there's a developer go-to-market component to it. I feel like I can be very supportive. So I like to focus on that a lot. But if you start to move up stack, yeah, there's, again, as we were alluding to earlier, I feel like DeFi has really shown promise and has shown signs of product market fit. And how do we then take this stack and then have it sort of cross the chasm for real world usage, right? So I think that's going to be something that's really interesting. NFTs, as Richard pointed out, with various companies have shown signs of product market fit with what you can do with on-chain metadata has been really fascinating. So that's going to be interesting. And then, you talked about play to earn, and my 2 cents on this, because I'm no expert when it comes to this stuff, but just as I look at these spaces sort of outside in, they looked a little bit like a user acquisition strategy for some of them. I don't think many of them fall into this category, or maybe some of them fall into this category, but there just needs to be good counterbalance or counterparty to support the inflationary nature of some of these tokens, right? So, the health DAO, the data DAO, component makes a ton of sense. We just need a counterparty to support these tokens. Anyhow, long story short is that I think we're starting to see signs of strength here, and hopefully we can sort of, rally behind that to see things that, really start to make a difference in the real world. So, but that has to come with sort of like the infrastructure that needs to support it. And I'll just add like 10 more seconds here, but if you look back at sort of, if you've been building in this space since 2018, you start to, you know exactly how to get started, right? Smart contracts, you know how to build for those. You start to use Oracle infrastructure, you start to maybe use Chainlink, maybe you start to use data infrastructure like the graph. And I think we're starting to also push the limits of what those things can offer now. So I'd say like the 2018 to 2022 vintage, leveraged these infrastructure protocols. And I think we're going to start to see a revision of those start to happen because again, I think the airplanes have gotten big, the airports haven't caught up yet. So I think aside from the scaling solutions, we're going to start to see better tooling and better off-chain support to support things that need to happen on-chain and vice versa. So that's going to be an interesting area to focus on.
Yeah, let me follow on. I'd say, actually to one of the companies Richard just mentioned, Sorare, I mean, there are some businesses which have hit that product market fit and have continued to grow through the last several months, quarters, regardless of what you're seeing in the macro backdrop and crypto prices and so on. I think, as we tend to focus on a very different end of the spectrum, we're always looking for product market fit at a much greater scale to be able to allow us to invest much larger quantities. And I think, those opportunities are few and far between, but it's an increasing number of these opportunities. And I think looking at some of these scaling solutions, they're quite nascent and they're well funded for maybe 10 years at this point. With not very much capital because you just don't need that in this space. I think the sheer volumes of capital that have come in have opened up people's eyes, regulators' eyes, and so on and so forth to exactly how much emphasis needs to be put on this sector. And so where we're spending a lot of time is really looking at compliance, onboarding solutions, and so on and so forth, and seeing which of our Web 2 companies are actually coming to us and saying, how do we get more involved in this space? And the vast majority of our portfolio is Web 2. We're early investors, or relatively early investors in Improbable, for example. They've been phenomenal contributors to this space in the last few months and quarters, especially as they've been continuing to build. And I think there's a lot more incredible stuff to come out of them. And so I think you have Web3, it's growing, it's doing incredible things and really pushing the boundaries. You have a lot of infrastructure that maybe breaks when things grow too quickly, perhaps with play to earn and other things. That's not a negative in my mind, it's a positive. It brought new people to set up wallets, to get involved, and maybe they disappear, but maybe they come back. The reactivation will be super interesting to monitor as things pick up again. At the same time, you have this heavy amount of attention, right, from large financial institutions around the world, large balance sheets who are looking to get involved in different ways, but also traditional large Web 2 companies. And yeah, it starts with maybe sports, retail businesses and brands which are really getting involved in token-gated e-commerce or maybe just an NFT loyalty program and so on and so forth. And POAPs is great as a good way to see how we're all getting involved in this community and where we're all spending our time. But I do see that next wave also coming in from Web 2, really coming into the space. And we see that a lot in our portfolio. People are asking questions, asking the right questions. They have to get started. They're on the same ramp that everybody takes. So it's a really, really fascinating time at the moment. It's not that we're pausing just because prices have come down and there's a lull in the market.
But that's a good reason for hurrying up.
Absolutely.
Yeah, I would totally agree with that. And I think, I mean, on top of the infrastructure part that Anand mentioned, I think on the application layer, what we're looking at is just real world usage and demand and traction. Because I think until now, if you look at all the different crypto sectors, stablecoins, DeFi, play-to-earn games, the demand is mainly crypto natively driven. I mean, people use stablecoins for crypto settlement and trading. People use DeFi for leverage trading in crypto. People use play-to-earn games just to earn more of those massive token incentives. And I think if we want to get out of this bear market, we really have to cross the chasm to the real-world economy, real-world utility, and make those play-to-earn games that good that people will play just for the user experience and utilize those crypto rails just in order to improve the user experience and not to earn like massive token rewards. And I think the same is true for borrowing lending protocols in DeFi that hopefully people will use in the next couple of years for real-world investments, or stablecoins, for example, if you think about cross-border payments or even treasury payments within corporations. I see plenty of real-world utility there for individuals, for companies, and I think that's the point where we will break out of this current bear market.
I totally agree, and so it's that bridging to the real world, but stepping back a little bit, I think it's really interesting to note that with the current downturn, a couple of things. One really, I don't think it would be fair to say that DeFi has failed. I think the biggest holes in our ecosystem have actually been related to CeFi predominantly, and it's arguably the kind of human factor. Not that we need to get rid of all humans, but and then I think the narrative that you see in the mainstream press, unfortunately though, is still, particularly the should we say the kind of financial press, can be quite negative and dismissive of where we stand. And I think holding out for the financial institutions and the financial press to come around to thinking that this is the way we need to rebuild banking, I think might not be actually the answer. So for a long time, there's been a kind of catchphrase, at least has reverberated around the ecosystem as I've observed, which is like the herd is coming, the institutional investors, it's going to be, we're going to see this transformation. I think it's particularly hard for the financial institutions to do this stuff, obviously, because they're so under the scrutiny of government and the regulators, and appropriately so. Everyone's trying to do a good job of that. So perhaps, though, it's going to be more the connection between, if you think about the use of DeFi in the trading of NFTs and how NFTs are taking off in sports, entertainment, culture, and in games. And we see quite a few people now trying to bridge that gap to the real world. Did that event happen? Did that score happen? Did you turn up there? And to try to start to tokenize those elements of the real world, which at the end of the day, let's face it, there's an enormous sort of real world assets out there that are not currently tokenized. And it's been a struggle because they are non-fungible to do price discovery, to get the liquidity going. And we have a couple of players in the space who have done really well as teams, but really not taken off in the way that you can in the DeFi space when you're dealing with fungible tokens. So I think inventions in that space, perhaps catalyzed by, ironically, the herd of sort of Web 2 media institutions coming into the space and realizing that maybe that they can, save their souls maybe and help us move away from this ad-driven approach to media, give us back ownership of, our digital lives, and adopt some of these components. And so I guess that sounds like it would be a good thing, and perhaps it is going to happen. I'm not saying that it's going to be easy, because fundamentally some of the music companies or the Hollywood, film companies or just the news companies and so forth, the social media companies, they're having to swap out, sort of hot swap their business model if they can do that. I mean, I think the track record for doing that successfully is pretty poor, but maybe they'll give it a go.
Very interesting. Just following on the changing of business model, I'd like to steer our discussion a bit closer to home, to what we're doing in the day-to-day, and get your thoughts on one interesting theme that came out of this cycle was the evolve evolvement of investing DAOs. So my question is, how do you see Web3 changing traditional VC investing practice? Do you see it as a competitor, or is it something that augments our practice? From my side, I think it's a very interesting development. We definitely see it as an augmentation to our practice, but I'm very keen to hear how you're seeing the business model changing with the advent of decentralization.
Yeah, happy to kick this one off. Look, I think I completely agree with you philosophically. I think it's very complementary to the traditional VC model. Of course, we sit at a different stage, so I think there's use for both. If you think about communities coming in and getting visibility into projects because they're actually participating, they're investing in their success, they're motivated, incentivized financially to see them through their various milestones, I don't see that as a bad thing at all. Actually, democratizes access to these kinds of investments, but more than that, brings a community with it. And I think you see this thematically in healthcare, you see this geographically with things like Africa DAO being set up and so on. BitDAO, Alliance DAO, very large, well-known names, of course, in the space. So it's taken off in a great way. I do see the value in traditional VC, of course, being slightly different but complementary in that, we are happy to make longer-term investments. We're actually happy to make larger investments just because there has historically been more capital raised here than let's say grassroots through these investment DAOs. But look, maybe that evolves and changes over time. But I think philosophically, I don't see any reason why the two can't coexist and why they're not complementary.
Yeah, definitely. I think, especially from a community point of view, those kind of token investments or fundraisings through tokens can make a lot of sense. And obviously, Chris Dixon from A16Z talks a lot about that especially if you want to build up a network and network effects in the beginning of your business, obviously, you don't have a lot of users. So the additional utility for users is not that big. So how do you incentivize them to use your platform, your product? And that's where tokens can make a lot of sense, because you basically add a lot of financial incentives for early users. You bind them to your brand, to your product. You create a huge crowd of very committed users. And you are basically able to bridge that initial very hard phase where you want to bootstrap your network, but your network, your product, doesn't have a lot of application utility yet. So I totally agree with Neil that especially from a community user point of view, it's great to build this community of very committed individuals around your product. And obviously then there are other challenges, more operationally, legally, that I guess you guys know way more about than I do. But I also see those two kind of investments as more complementary than competitive.
As they say, it takes a village to kind of raise a child. So if you can get the community behind you, that certainly can help. And so we're supportive of that. But I guess you can think of those investment DAOs a little bit like the kind of Web3 version of a kind of a collection of super angels, but and more than that, because you can open it up. And I think it's certainly complementary in that we've got some investments in some of the DAOs, and that gives us a visibility into the ideation that's going on and some of the projects operating in that very earliest stage. And we're also have ventured out and built a program called Fabric X, and where we invest as little as $100K right at the ideation stage for 1 or 2 or maximum sort of 4 people. And then in that context, where we're kind of up and running UK, France, and Germany, and expanding further, we are looking at ways in which all of the non-capital side of what VCs are meant to do or do can also be built using kind of decentralized infrastructure. So how do we build a community-owned set of infrastructure that can help connect you with the best talent? How can we build a similar infrastructure that helps connect you with the best service providers? How we built a kind of community-owned infrastructure that allows you to do a kind of Hacker News type thing, or there's an internal product, a Y Combinator, for just talking to your peer, CEOs and fellow founders about the challenges you're facing. So kind of an expert network, if you will. So I think there's software that could be DAO governed around those services and that expertise that can then complement the individuals who come in and contribute their capital, and all of that can be revolutionary, I think, for getting projects off the ground at the very earliest of stages, and we're looking to see how we can weave that into what we're doing already with our kind of whole Fabric X program. So we're excited about it.
Yeah, to me, the term investment DAO, I think it's overloaded, right? I think there's two definitions to it. One of which is you have a group of investors come together, create an investment club, and then invest through that DAO. So this is something like what Syndicate offers, which is like, I guess, maybe like an on-chain version of AngelList, or to some extent something like a Kickstarter, right? Depending on your jurisdiction, how you want to raise capital for your software-based startup. So there's that's one investment DAO. And then there's the likes of like Orange DAO, Meta Cartel, and others, DeFi Alliance, now called Alliance DAO, where you have capital that's still being invested by a centralized entity, but you have a DAO, a collection of members who augment the capital and come with true support. Like Orange DAO is a community of Y Combinator, ex-YC founders, right? So the capital gets invested by by Orange DAO, I'm sorry. But you get the community support with thousands of members who are part of this alliance. So all this is to summarize to say that, yes, it's a great augmentation and very complementary to what lead investors like the folks here can support you with. But at the same time, I mean, you as a founder, like, I think you need to run a really good process, right? Like, you need to find great investors that you can be aligned with, but who can also be a part of a syndicate that you can call on when you need something, right? So like the ball's in your court to be able to pull that together when it comes time to fundraising and like closing your round.
Perfect. So it's great to hear we're not losing our jobs as VC investors. That's for sure. I'm keen to hear your thoughts on, this is a two-part question. One is, how do you see success as an investor in Web3? Maybe you can touch a bit on how do you benchmark your returns? How do you think about exits, especially on the token side? And also success for founders. So Richard, you mentioned about value adds that VC investors provide to the founders. How should founders think about success? And maybe you have some advice for them. And I know we have quite a few early stage founders in this room as well, so it would be very useful to hear your thoughts on that.
Pile in quickly, and then I'll pass the baton quickly as well. So like one way I've always thought about this, sort of coupling those two questions together, is that you build your business on the basis of the returns from the outlier companies in your portfolio you've been fortunate enough to work with. But you build your reputation actually based on the ones that are either not doing so well or somewhere in the middle, where I think it's super important. I mean, you can obviously build your reputation over decades and lose it in a heartbeat if you don't take care for the founders you're working with and the entrepreneurial struggle that they're sort of engaging in. You'll make sure that you land that plane safely, and when that becomes necessary. Obviously, that can often be that's not the stuff that typically catches the headlines. But having been a founder myself with my fair share of some success and failure, I think it's super important. And I think, what does that involve? I mean, it can involve everything from, helping think about when it might be time to kind of take that exit that is not quite the life-changing financial experience, or it could be how to bring in the right person to think about restructuring and bringing costs down. It could be just being a sounding board for different aspects. So I think that's pretty important in terms of how to measure success with founders. And on just thinking quickly on the returns numbers, I mean, our LPs, our limited partners, who our investors are still very focused on multiples. It's extremely hard for them to kind of benchmark though, and certainly because it depends exactly when you start investing, and then markets go up and down and so forth. But at the end of the day, they've certainly shifted their aspirations up from the kind of like 3 and a bit X return on the fund, because funds have done better than that. But at the end of the day, they're also looking for not just potential multiples, but real distributions back to them. And I think you want to be doing better than 10X to deliver that. And how that is versus BTC and ETH, really hard to say. It depends when you buy and when you sell.
Thank you.
Yeah, I'm probably in a similar boat here, right? So we've deployed a lot of dollars in absolute terms into the space. It's still a relatively very small percentage of our overall capital deployed across tech companies globally. And so we're absolutely benchmarking ourselves the same way in terms of VC-like fund returns, how do we get an appropriate return for the risk we're undertaking, and so on. This is a relatively new area for us to be investing in. We started investing in crypto Web3 in the last 2 years, unlike crypto dedicated funds, for example. And so we are potentially looking for 10x returns. That would be fantastic in late stage context in this space, because you do actually have very, very fast growing large businesses that we can and do support. Speaking of support, what do we offer our founders, our companies? We're late stage, so we're investing in a specific type of company and sort of with a specific mindset. But I think where we come in is we've got 3 things. One, an unparalleled network. We've got 500 companies or so in our portfolio or approaching that. There are a lot of possible synergies. We have a lot of consumer companies in our portfolio. If you're looking for consumers or end user adoption in any protocol, platform, and so on, I think there's a great opportunity just to work with existing customer bases, find ways to sort of partner there. We're having a few of those discussions absolutely at the moment. Secondly, we've got scale. We've got 10 offices around the world. If you're looking to attract a different talent base or approach a different customer base, I think that's all something we can help with. Actually, just next month, I'm taking one of our portfolio companies on a roadshow in the Middle East to meet the largest financial institutions, regulators, so on and so forth, just to make sure that they're present, they're potentially able to tap into a new market. Finally, we're able to help with support, but I think the support that we offer, again, is for later stage companies, and so very important to bear that in mind. How do you organize your finance team? How do you get yourself IPO ready? A lot of investments in the space are, of course, token investments, but there are equally quite a few equity investments in the space. And equity-related investments, what's the exit? Perhaps it's an IPO, perhaps it's an M&A exit. How do you think about that? We just have a wealth of data points, having seen a lot of that in our portfolio, gone through that in quite a bit of experience. We have maybe 40 plus public companies at this point. How do you help manage down our positions? We've got a team in-house of experts who've been doing this for decades, who actually help us with our public portfolio and how to actually exit in a sensible way, being mindful of liquidity and many, many other constraints and variables. So we think about things a little bit differently, but I think ultimately we're looking at the same thing here. How do we support the ecosystem, and how do we add our flavor of support as the SoftBank Vision Fund?
Perfect.
Yeah, I'll quickly tack on. I think when it comes to portfolio construction, I actually like to refer back to this book by Morgan Housel. It's called The Psychology of Money. If you haven't read it, I strongly recommend it. It's like have you folks read it? Have you given this?
I have not.
All right, I can't recommend it enough. But I think it just creates like a good framework for how to think about money at large. And I lean on that because in some ways I'd say portfolio construction and returns, honestly, a work in progress for a lot of us who are like, crypto native funds now. And, honestly, at the end of the day, a couple of things leaning back to Morgan Housel's sort of advice, the size of the fund sort of dictates the strategy. And then also you need to know how you communicate that back to the investors into your fund. And in a similar vein, right, like now segueing into sort of founder needs and what success looks like or how we can support. I'll just kind of quickly summarize it, because I really focus on very early stages. So the 3 things, especially because we look at a lot of developer-oriented protocols, how can we help you with developer go-to-market? How can you help you with security best practices? And lastly, to Neil's point, there is, just make sure if you're, the investors you're aligning yourself with, they can give you the kind of support you need for customer development, or design partners who can sort of help you get off the ground at the very, very earliest stages. Like, can we open up the Rolodex and introduce you to 10 DeFi protocols so that we can get your infrastructure tool tested and vetted very quickly. So those are some of the things that hopefully you can look out for.
Thank you. Patrick, any closing thoughts? 30 seconds.
Yeah, I think most has been said. I would just add 2 crypto-specific challenges, especially for early-stage startups. And I think one of them is token economics. And I think those VCs that have built up a reputation, that have helped companies design several token offerings, already have a massive amount of value that they can provide to crypto companies. And I think almost every early-stage crypto startup is facing that challenge. And the second one is obviously being regulation. So I think it's such a new space, all that regulatory action is happening right now. So there's very few people, even in the VC landscape, that I think have the experience, the network, the contacts, etc., to help founders navigate that super complex area. And I think if you are able to provide as a VC advice and value on those two fronts, I think you will have a lot of success with early stage crypto founders.
Perfect. On that very important note about regulation, I'd like to wrap up today's session and thank everyone very much for being on this panel and also our amazing audience. Thank you.
Thank you.
Thank you. Thank you
Thanks.
all.
Thank you so much for that great panel.
Thanks, gentlemen.
You know, investment is obviously so key in following the crypto movement, and it's so great to see how the community is supporting this technology.
Yeah, well, now we're moving on to our next session, which is a fireside chat. And we're very honored to have Sébastien Borget, co-founder and COO of The Sandbox, sharing the stage with Yat Siu, co-founder and executive chairman of Animoca Brands.
This session will be moderated by CoinDesk's Jamie Crawley, and we will be getting to the bottom of how they've built their Web3 unicorns. So please join us in welcoming them to the stage.
They're coming.
And go.
Maybe we should tell them to put the mics right to their faces.
Well, good afternoon, ladies and gentlemen. Thank you for joining us for this panel on building Web3 unicorns. My name is Jamie Crawley. I'm from CoinDesk, and I'm very happy to be joined by Yat Siu and Sébastien Borget of Animoca Brands and Sandbox, respectively. Good afternoon, gentlemen.
Pleasure to be here. Thanks for having us.
Sandbox, obviously a virtual gaming platform, and Animoca Brands, a majority shareholder thereof. So by way of introduction, Seb, I'll come to you first. Tell us briefly about what the Sandbox is, what it offers, and then, Yat, I'll come to you to discuss Animoca's role as a majority shareholder thereof.
Absolutely. Hi, everyone. Pleasure to be here. So Sandbox is essentially a decentralized virtual world where anyone can make 3D content as well as games and experiences, truly own them thanks to the power of blockchain technology and NFTs, and monetize them the way they want. It's a franchise that started already over 11 years ago on mobile, really with this idea to empower players, turn them into creators, and have been evolving over the years into more than a game, but a true platform offering different tools like a 3D content creation tool, a no-code game maker, a marketplace, a map, a game client as well. And we've been one of the pioneers into blockchain gaming. We've even contributed to build the open metaverse, that 3D virtual world where we're going to all interact and live more social, more immersive experiences with our avatars. And we've also been one of the leading projects in helping brands to onboard the metaverse with more than 400 major partners already.
Yeah.
Well, I mean, I think the journey for us really started when we got into non-fungible tokens with CryptoKitties back in 2017, and when we saw the power of what non-fungible tokens represented, which was a form of true digital ownership, basically where we could actually own our digital assets and therefore the derivative of our digital time. You know, we fell in love with that, and during that time we ended up meeting many companies. I sort of go back to I think it was possibly the very first real NFT conference. It was in Hong Kong in 2018. You know, you were there, Axie was there, OpenSea were there, but there was only like 200 of us, Decentraland, right? We ended up investing in almost all of those companies, but it was only because you have to remember 2018 was the big crypto winter. Like, this is not a winter in comparison. Bitcoin was like $3,000, ETH was like 100 or 150, and we were all sort of these believers in that space. drinking our own Kool-Aid. And that was kind of how it started for us, where we weren't thinking to the question of the majority shareholder about, do we want to be a majority shareholder? We were just thinking about building this new space where we could have digital ownership. And so we made investments, but we also looked at where we could offer additional value. You have to remember in 2018, there was no VC money for projects like the Sandbox. Even when we led the round for Axie Infinity, we were the lead investor. The entire round was $800,000, right? Those were totally different times. So in order for us to bring the impact to them, we felt that we needed to acquire the company first, which wasn't called Sandbox. It was Pixel, the Argentinian studio. And we shared the vision that they would do something. And what we thought, we can help them get to that point. They had the chops. We had, obviously, finances, but we also had other experiences. We could bring maybe the Asia market. And it became a great collaboration. So I don't think of ourselves as much as a majority shareholder, as more as a great partner. And today we have over 380 investments, and many of them are acquisitions as well, where we hopefully share a similar experience, where we can work with others to help them build the open metaverse, and we share in this Web3 ethos. So that's really what Animoca Brands is about.
Thank you both. You said this isn't a crypto winter. So in this not crypto winter, Seb, I'll come to you with this first. I remember reading maybe back in April, which seems a very long time ago now, that Sandbox at the time were pursuing a $400 million funding round, which would a $4 billion valuation. We're here to talk about Web3 unicorns. Unicorn obviously being a popular term for a startup with a valuation of $1 billion or more. Give us, if you could, a flavor of how maybe conversations with investors have changed over the last few months. Are they a little bit more circumspect, a little bit more cautious? How have things been going there?
So I think I will let Yat speak on the investor perspective, and I will share more from the adoption and user engagement perspective. Since we're a platform, we are seeing every week, if not every day, major brands from all around the world entering the Sandbox, acquiring lands and launching various activities, activation, or experiences as well. We just released 3 weeks ago a major milestone for the Sandbox called the Alpha Season 3. It is a 10-week event featuring more than 98 experiences, including 22 major brands. You have like The Walking Dead, Ubisoft, Atari, Steve Aoki, Warner Music, just among many others. And we've seen tremendous engagement from the users in this season 3. So users are still here, playing, engaging, spending over 30 minutes a day on average per experience. Every new day, a new experience is coming. So we're definitely showing that there's player, that there is content that's being built, and actually it's been built not only by us, but by a growing ecosystem. So the Sandbox, at the beginning of the year, we had 20, 25 studios around the world that were creating content. Today it's over 100 studios that are themselves have been hiring artists, level designers, narrative designer, and other of the jobs of the metaverse. And all of that has been contributing to the creator economy. That's a circular economy where the studio are paying artists in Sand token, and they reinvest into the platform. The brands come and they buy the land in Sand. So land market has been also very active on the secondary market, showing a lot of activity on the NFT side. I'm very confident that if we're able to show that there is engagement and adoption, no matter of the cycle of the crypto market, specifically a winter, also given that Sandbox started in 2018 into a crypto winter, that we have a good avenue ahead of us. And the year is not finished, so I think around investment, both ourselves will have interesting announcements, but also ourselves as a platform have been very supportive towards the ecosystem. We have launched an accelerator program with Brink, where we've been supporting 10 startups. And we have also announced a few investments into builder studios that contribute to the growth of our ecosystem.
Well, maybe just to add on this one, I mean, we just closed a funding round with Temasek, Boyu, and GGV last week, valuing the company at close to $6 billion, not quite. So it's a demonstration that you can still raise money in this market, and it's not really a case where there's no money. In fact, the market is quite liquid. It's just a question of valuation often, because prices have come down. Market is obviously a little softer. And people are clearly also more, I would say, careful. But there's also less competition, right? If you're a good company, you stand out. If you look at 6 to 9 months ago, there's a lot of excitement, a lot of companies that came up, but also a lot of companies that maybe shouldn't have received the funding they've received. It was just somewhat exuberant, which happens often in these waves. Those companies are all gone now. And it was very similar to 2018. Those companies, the stars of our earliest portfolios, call it OpenSea or Axie or Sandbox or Decentraland or Dapper or Wax even. These companies were building in the winter. And if you're building in a time when things aren't great, then actually you're not building it just for the money, you're building it for purpose. You have a real reason behind it. And I think this is the other thing. Investors see that too. If you're building a company that is purpose-driven and that has a big mission, which I think Sandbox has and what we're trying to support as well, then finding money isn't the problem. If you look at, for instance, gaming itself received multi-billion dollars of funding just this year, including during the bear market. Most of it went into Web3 gaming. And that's interesting as well. For anyone who was building games traditionally in the last 3 years, there's never been a better time to raise money from a gaming perspective, regardless of it being supposedly a winter, because people see that future. I guess it's like how Simon Sinek said it, right? It's like people don't buy how you do it, they buy why you do it. And for Web3, there's a very big why. And if you believe about this future, about digital property rights and the meaning behind it and why it's a better future in the digital world, then that's where our youth is. Then as an investor, you're investing in the future. Why are people pouring money into TikTok, for instance? Because that's where our youth is. That's what young people want to do. Or why were they pouring money before into apps? Because that's where young people are. And where are the young people today? They're in the metaverse. They're building Web3. They're into crypto.
Just following on from that point, yeah. There'll be some who would say capital will still find its way into established firms, of which you two both represent. What would you be saying then to more nascent firms who are not dissimilar to the Sandbox in that sense, who are at the early stages in this environment?
So we have now over 380 investments. At the start of the year, we're close to maybe 320 to 330. So if you look at our pace of investing, we're certainly deploying capital pretty aggressively, and we're not the only ones. You constantly still see news about companies raising money. It may feel tougher, but most of the conversations are usually about valuations. If you have a good business, if you're a good founder team, if you have some fundamentals, you can raise money. I mean, just yesterday, we saw the news about Doodles raising, what is it, a 700 million valuation. And wonderful, congratulations and God bless them. Those valuations are still possible, despite what may appear to be a bear market. And there's, of course, less competition in the space, again, as I said earlier. So for the founders themselves, even if you're not that established, you have other avenues. You've got accelerators. We have accelerators. Sandbox has accelerators. There's also a lot of capital. They just don't want to go out and invest maybe at a 100 million valuation, but if you're willing to be a little bit more humble as the market dictates, you'll raise that money. 2018, when we made these investments, most of them, of the companies we invested or acquired, were in the single-digit millions. Those days will never be back, I think. But that's just an illustration. And yet here we have shared value across all of those portfolios. So my general message to founders as well is it's not so much about the valuation. I think sometimes founders do get hung up on it because it's a sense of pride and ego, and it's also relative. Oh, he raised at $1 billion, so I should be worth at least 2. Sometimes people do that, even if it's not the same time. But what's more important, the valuation or who's your partner? Who's the one who can take you to that next level? Bring in that kind of capital. It's not about just how much you're worth now, because you're not building for today, you're building for tomorrow. So who will be your partner to build a better tomorrow is, I think, the way that we think of it. And the right type of companies have the same attitude. And so they continue to get funded. I mean, there's a lot of smaller companies that are even pre-revenue. They're not raising at a 50 to 100 million valuation. They're raising maybe at 20 million, but they're growing.
Maybe I would like to add, there's still a strong wave of innovation happening, and it's not like we figure out the perfect model of monetization of Web3 or engagement or Web3. So it's definitely more a matter of like for the founders to be focusing as well, not on the noise, the size of the community over Discord and other vanity metrics, like Yad was saying, but into creating real adoption, real engagement, and going back to just like any business, like the core KPI that investors are looking at.
And just following on from that, Seb, back on the user engagement point, there's been some interesting news only last week, in fact, about DBS looking to purchase land in the sandbox. I remember several months ago HSBC doing the same, and they seem to view it as a platform for powering their commercial partnerships in sport, e-sport, gaming, and so forth. Could you give us a flavor about by and large, the kind of firms who are wanting to sit down with you and discuss this sort of thing? Are we talking, those two examples I just gave are both in finance? I'd be interested to hear about sport, music, fashion, lifestyle, celebrities, and so on.
So you